Before today, the market wasn't even sure we'd see 3 rate cuts before the end of the year. Now it's certain there will be 3 and possibly even 4, and that all happened after this morning's tariff announcement. Basically, the bet is that the hit to global growth will force the RBA's hand into cutting interest rates here, and we won't see the same inflation rise that the US will as a result of the tariff price increases. Now, on the market, that helped banks in particular minimise their losses. In fact, CBA gained about 1% or close to. We've also seen some retailers gaining ground on hopes of these rate cuts. Gold miners obviously gained ground because of its safe haven status. And there were some hopes of Chinese stimulus potentially to counter the effect of the US tariffs. The Chinese markets didn't fall as much as other markets around the region. Japan had a fall around 3%, China much smaller, mostly below 1%, but that didn't help the big miners. They were all down around 3% on the ASX. And for those sectors that temporarily escaped tariffs in today's announcements, such as pharmaceuticals and gold, it does look like they will be in the firing line soon, with further industry-specific tariffs expected to be announced.
Well, this term, Donald Trump has been sticking to his word. What are the implications for the US economy and the global economy if these tariffs are in fact realised?
Look, Alicia, people had been betting that Donald Trump was largely using these as a bargaining chip, but if you look back, Donald Trump has been a fan of tariffs since the 1980s. This is a policy that he believes in, and he said as much this morning. And as you say, he's largely carried out what he said he's going to do. And if tariffs do stay in the US, we're looking at tariffs that are now higher than they were in the 1930s under the Smoot-Hawley Tariff Act of Ferris Bueller fame. This is a massive impost on imports. It's going to massively increase consumer prices in the US for imported goods virtually overnight. They have been racing to increase inventories of non-tariff charged goods ahead of this, but those will run out and US consumers will pay the price. Now, Donald Trump is hoping that it will spark $6 trillion of investment in the business sector to build new factories and bring manufacturing back onshore to make America great again. But you can't build factories in months. This is a process that will take years. It will consume a lot of labour, a lot of materials, a lot of labour to run the factories. Where is it all going to come from? And with the supply shortages, the inflation problem in the US may not just be temporary, it may be an ongoing inflation issue.
Well, how could Australia's economy be affected by the tariff fallout?
I was at the Reserve Bank's Financial Stability Review earlier today, very conveniently timed. Of course, the report was written before we had the details of these tariffs, but the Reserve Bank did cite 3 key risks for Australia. One was overvalued share and debt pricing, vulnerable to falls in the event of a big shock. Well, we just had a very big shock this morning. Another was economic and financial risks for China. Well, China's just taken another big hit with an average tariff rate now close to 70%. And the third was escalating geopolitical tensions and the prospect of potentially cyber hacking and other malicious events generated by those. Well, these tariffs are not generating global goodwill. So with Australia's 3 biggest trading partners in the firing line, all of these risks that the RBA saw as being key are now much more likely to actually come to pass than they were when they wrote that report.
Michael Janda, thank you so much.
Thanks, Alicia.